Welcome to the cost accounting course. In today's session, we will discuss about cost concept and classification of cost. First of all, we will discuss what we mean by cost. In business, cost is usually a monetary valuation of the efforts, material, resources, time, utilities consumed, and risk incurred, opportunities foregone in production and delivery of goods and services. So you can see below in the pictures, the production takes place and there is a supply chain where it is involved in distribution of the product and till the product is being reached to the consumer or to the customer place. So what is cost? The cost can be defined as the amount of resources given up in exchange for any goods or services. Example, material cost, labor cost, electricity cost, fuel cost, etc. And capitalized cost is a special category of cost which is incurred on fixed assets are called as capitalized cost. Cost incurred to purchase machinery is an example for capitalized cost. And the cost can be classified in various types of cost by elements, by function, by as direct and indirect, by controllability, by normality, by variability, and by relevance. By nature or element, under this classification, the costs are divided into three categories: material cost, employee or labor cost, and expenses. Material cost, which is incurred on physical substance or a thing used for manufacturing or assembling a particular product. And the employee cost or the labor cost is a cost incurred on human beings like salary, wages, bonus, incentives, retirement benefits, perquisites, etc. Expenses are the costs which are incurred for services. Expenses are other than the material and the labor are covered here. Example, electricity expenses, rent, and telephone. By function, we divide the product as production cost, office and administration cost, selling and distribution expenses, or marketing cost. Production cost are the material or the direct labor or the storehouse overheads or the cost which are incurred in this particular area. And the office and administration cost are normally the cost which is incurred by the company or the organization for formulating policy, directing the organization, and controlling the operations. Selling and distribution expenses or marketing cost or expenditure incurred in generating demand for the product or services of the company or moving an article to a prospective customers, etc. Then other classification of the cost is direct and indirect cost. Direct costs are those costs which can be easily attributed to a particular cost center or a product. The cost of fruits in production of pulp production is a direct cost. Direct costs are normally easily identifiable with the product. The cost of hard disk while assembling an PC is a direct cost. Indirect cost, the cost that cannot be assigned directly to a particular cost center or a product is called as an indirect cost, or commonly it is also known as common cost. It needs to be apportioned in order to be assigned to a particular product or a department. Cost incurred by the maintenance and the support staff, wages paid to a security staff, storage cost of units produced, etc. are the various examples of indirect cost. Another name for indirect cost is popularly known as overheads. It is also common in nature, cannot be attributed directly to a product total cost. But there are various methods which can be used to calculate the indirect cost, and then it can be apportioned to a particular product or a cost center. Like example, rate per hour method, composite rate or department rates method, and ABC, activity based costing method. And the other method of classification of cost is controllability. Cost here are classified as controllable and uncontrollable cost. Controllable costs are the costs which can be influenced by an action of the specified member of the undertaking. And uncontrollable costs are those which are not controllable. The distinction between these two costs is very sharp. In fact, no cost is uncontrollable. It is only in relation to a particular individual that we may specify a particular to be either controllable or uncontrollable. Example, expenditure incurred by the tool room is controllable by the foreman in charge of that particular section or a tool room. But the share which is apportioned to machine shop cannot be controlled by machine shop foreman. Other classification of cost is by normality. According to this basis, cost may be categorized as normal cost and abnormal cost. Normal cost is normally incurred at a given level of output under the conditions in which that level of output is normally attained. And cost which is abnormally incurred in some particular time, it is called as abnormal cost. And cost of material which is evaporated is normal loss, whereas goods lost by fire or theft is treated as a abnormal loss. Another classification of cost is by fixed cost and variable cost and semi-variable cost. That is mainly based on the variability in the production output. By variability, we divide them as I showed in the previous slide, fixed cost, variable cost and semi-variable cost. Variable costs are those costs that are vary directly and proportionately with the output or the production output. There is a constant ratio between the change in cost and change in the level of output. Example of variable cost or direct wages. It varies the number of hours of wages the workers are working in the factory or in the production process. Then direct material which is consumed in the production process of a particular product. More the number of units you are manufacturing, more material will be used or consumed. And material cost of vehicle. It depends on the number of kilometers you are traveling in a particular vehicle. Fixed cost is a cost which does not change in total for a given time period despite wide fluctuations in output or volume of activity. It doesn't vary when you vary your number of outputs you are manufacturing. An example of fixed cost is rent, which you're paying for the building or for the property which is used for production process, and the taxes you're paying by the company to the government, which will be fixed. And semi-variable cost is a special type of cost which includes the fixed cost as well as the variable component and thus partly affected by the fluctuation in the level of activity. Example of semi-variable cost are telephone bill, electricity bill and the maintenance bill. So these are the costs which will be having the two components, that is fixed as well as variable cost component in the cost. And the next one is by relevance. Relevant costs are those future costs which differ between alternatives. Relevant costs may also be defined as a cost which are affected and changed by a decision. For example, sunk costs are also costs, all the costs incurred in the past that cannot be changed by any decision made now or in the future. Sunk cost should be considered in the decision. Sunk cost should not be considered in the decision maker because it's already incurred. For example, cost incurred on research and development of a particular product will be irrelevant while making decision whether to undertake production or not. In make or buy decision, the raw materials decisions, okay, cost of the material, wage rate will be relevant. On the other hand, factory rent will be irrelevant because factory rent is a fixed cost. Whether you manufacture or don't manufacture, you need to pay the rent. So dear learners, these are different types of cost classification what we have seen. So further reading, you can refer M.N. Arora, 2016 Accounting Book, Accounting of Managers, third edition by the Himalaya publication. And there is also a online resource which I given there in the link below. So thank you for joining. We will meet again in the further sessions on cost accounting. Thank you.